What up, trading fam? Welcome to another Back to the Basics with El Gato Gana, where liquidity, patience, and execution pays. Today we're going to be covering the dealing range. Here we have a diagram. We're just going to go over the top one real quick because the bottom one is basically the very same thing, right? They're both in a range. So for this top one, you have this daily high and a daily low, which creates the external liquidity, right? And then within that, we have the 4 hour high and a 4 hour low, which creates internal liquidity. And then we can even drop into the lower time frame, like the 1 hour high and the 1 hour low, which creates the internal liquidity for the 4 hour time frame, right? And then the 4 hour time frame is the internal liquidity for the daily time frame. And then in the inverse order is if we're starting with the daily time frame as your external liquidity, then your internal becomes 4 hour, right? So depending on whatever time frame that you're working with, it can be your daily, it can be a weekly, it can be a 4 hour or an hour. That can be established as your external range, and then you would want to go into a smaller time frame to find your internal range. So we're gonna hop into some charts here. Here we have a weekly chart. So these are weekly candles. We have this high that was formed here with this low that was formed, right, on the weekly. And in between that, right in the smack down middle, is called the equilibrium, right? So when price, in this example here, price has a bullish order flow, right? Because it's creating a higher high to a lower low to a higher high to a lower low to a higher high to a higher low to a higher high to a higher low, and so forth, right? And it's making its way out from the bottom side, this gray box right here, the bottom side of the range, the dealing range, where anything below this we would consider it to be more of a bullish order flow, a bearish order flow. And then anything above this we would consider it to be a bullish order flow, right? So price is making its way out of the bearish zone into the bullish zone. Now, price actually broke out right here, right? Came back in, and you can see now it flipped the zone. Instead of this being a resistance or a supplier where price continued to get pushed down, as you can see here, once, twice, 3 times, 4 times, even 5 times, price got pushed down every time it went up to this area, right? So that was like a level of resistance or supply. But then once it broke out here, it came and it didn't come back into this range. It actually created a whole new range, right? So this is the new range that it created. So it came, created this high, and then this low. And then within that range, you can see where the equilibrium is. Here, most of the price action is in the discount array versus the premium array, right? So our premium is buy side liquidity and our discount is sell side liquidity. So the sell side is where we would consider it to be bearish because that's where price drives down to take out sell side liquidity, and we would consider this side to be bullish because that's where price drives up to buy side to take out that liquidity, right? So let's hop into the daily of this chart. Alright, so here's the daily. This is what we just went over, right? The top side of the range would be considered the premium, buy side liquidity, or supply. Its role is to push price down, right? And then on the bottom side of it, we have what's considered discount or sell side liquidity or demand, right? And its job is to push price up. So once it did get into this area right here, its price popped up, right? It still pushed it down, and then popped back up and got pushed down again, and then up again, and then this time it didn't go back into this dealing range. It created a new range. So when we see this, when we are tracking our dealing ranges, this is what allows us to see if our order flow is bullish or bearish, right? If we're uptrending and we're holding price in the upper quadrant, and then it breaks above the quadrant, and uses it as a support, it basically flips it, and it goes higher, then we know that for a fact, which is broke out of a range, we know that we are bullish, right? And then now what do we got? Well, now we wait till we establish our next dealing range. So we had created this high. So originally, before this high was created right here, right? Before that low even existed, our new dealing range was actually from here to here, right? Until price came and created this low. And once price created that low, here we go. Okay, so we created that high and then that low, right? And you can see price, instead of continuing this bullish order flow and going on this upper quadrant to create higher highs, we've been more inside the discount area, right, in the demand zone. And then within this weekly, we're currently within this daily lower low and higher high, and you can see where the equilibrium is, right? So we tapped into this premium, price came back down into the discount, and then back towards the equilibrium, and then back down, right? And you can see how right now we are ranging, but we're more bearish than a bullish order flow, right? Because where price is within these quadrants. So this is a bullish example. We're just gonna go, let's see, random, we'll do the Dow, right? So the Dow, we're gonna go ahead and just start right here on the daily chart. So this is a daily chart for the Dow, and we're gonna see where prices are right now, right? So this is where we closed. From here, we're gonna look back. This is a low, this is a low, this is a high, and this is a high. So we're gonna take this high and this high, right? Or low. So we got this high there, and we got this low here. So just looking at it from this perspective, you can already see that we're below the equilibrium, right? So we're gonna go ahead and mark that out. Price is underneath the 50%, right? So we are in the bearish order flow right now. Now we're gonna go into the 4 hour. And find the range within the 4 hour. So now the range within the 4 hour is this low here to this high here. And just like how we just went over the last example where price, when you're bullish from the equilibrium, price is gonna shift higher and higher until it creates a new dealing range. And then when you're bearish, price is gonna shift lower and lower until it creates a new dealing range, right? And it shifts the equilibrium, it shifts the highs, it shifts the lows. So here we are in the 4 hour range, right? And you can see the high of the 4 hour range was at the equilibrium of the daily range, right? And then the low of the 4 hour is close to the low of the daily, which is about there. Now let's go into 1 hour. So the 1 hour, you can see we're even in a tighter range. The high of the 4 hour is also the 1 hour, okay? So the high of the 4 is also the 1 hour. And that's the low that we're gonna be using price is also within the equilibrium of this. So looking at this and just solely looking at the equilibrium of the daily, the 4-hour, and the hour chart, what can we establish from this, right? Here's the daily equilibrium. This is the daily equilibrium where the high is at. This is the 4-hour right above price or right below price, and this is the hour right where price is at. Okay, so if we are still bullish on this, the ideal thing is to see price go above the hourly equilibrium and then remain above the 4-hour, go above the 1-hour, and then go above the daily, right? So that shifts price higher. Now if we continue with the bearish order flow, price will break this 4-hour equilibrium and then break the 1-hour low to shift, right? So it's like building blocks. It's the 15-minute range shifts the 1-hour range, the 1-hour range shifts the 4-hour range, the 4-hour range shifts the daily shifts the weekly, and so forth. So we'll do one more example of a random. Let's see what we got here. We're just gonna do the most random stock there is, and we'll go into a daily. Okay. So this one's a daily, and we recently created a newer higher high, right? So this newer higher high came from this low right here. But prior to that, we had this as a Dillon range. It was this high with this low, right? So price created this low, came back above the equilibrium, and you can see price basically maintained on the equilibrium and then broke above, taking out this high, right? So it took out the high. Now we created the new equilibrium for this daily. Okay, so that is where we're at as far as the Dillon range on the daily. And then now we go into the 4-hour. And what you're gonna notice on this, since it's just created the newest high, the daily, the 4-hour, and the 1-hour are all gonna have the same high, right? So that's very, very crucial to know. If the 4-hour, the daily, the daily, the 4-hour, and the hourly have all the same high, as soon as that 1-hour breaks and creates new highs, the 4-hour is a new high, the daily is a new high. So that's why it's important to understand what time frame you're in, where you are at in the Dillon range, and if you are at the extreme high of it and making higher highs, then that's a bullish, right? Versus at the extreme low of it making lower lows, right? And it's all due to context, because you can be at the extreme low and it can be a reversal to go higher, right? Or the same, you can be at the extreme high and it can be a reversal to go lower, right? So those are the reversals that can happen at the extremes, or you get a continuation, right? So you get a continuation to go higher here at the extreme high, or you get a continuation to go lower at the extreme low. So when we're looking at these equilibriums, we basically say, hey, is there a higher probability of price going higher? Then we're going to be looking for a continuation pattern, right? And the same thing for the extreme low. Hey, is there a probability that we're going to continue to go lower? So now we're going to look for sell setups for a continuation to go lower. But if we're at the extreme high and we have a higher probability of coming down, then we're going to be looking for a reversal, right? Something that confirms that reversal. And the same thing when we're at the extreme low. If we think price is going to go up higher, then we're going to be looking for a confirmation on the reversal to go higher. So this is a 4-hour. We're going to go into the 1-hour. You see, they all have the same high, right? So right now, all price has to do is break above these highs, and that shifts the daily, the 4-hour, and the 1 hour. I hope you guys found some value. Check you guys next time.